All right. Hi, everyone. Welcome to today's webinar brought to you by IronFX. All right. Thanks, everyone, for tuning in. All right. I think we're all good to go. Right. Before we start, please take note of the risk warning that comes with on trading the products on IronFX. Right. They're traded on margin and carry a high level of risk, and it is possible to lose all your capital. Also, take note of the disclaimer here that the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. Right. My name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, so before we dive into the charts and trading view, let's take a quick look at the economic calendar for this week. Right, we had Australia report its labor force uh, earlier this morning, right? We've also got US unemployment claims coming up in a couple of hours, and we've got UK retail sales tomorrow as well. So let's take a look at some of these key economic events for this week. As you can see here, okay, right, before that, just take note, this calendar is from Forex Factory, and I'm currently on GMT time here, so that's UTC 0. So as you can see, the Australia released its labor force report, which showed us the number of employment change as well as the unemployment rate for the month of March. So this report was released at 1:30 a.m. GMT time. So in the previous month, which was February, they had a blowout number of 170,000. So that means 170,000 new jobs were added to the economy back in February. And for the estimate for March, it was pointing to a much more subdued figure of 7.2 thousand. However, you can see the labor force actually contracted. It actually shed or lost 6.6 thousand jobs. And as well, the unemployment rate increased from 3.7% to 3.8%. So in whole, it was a pretty weak labor force report, which should typically should add some downward pressure on the Aussie. So we'll take a look at the Aussie later today. I mean, after this as well. Right. And then coming up at 12:30 p.m. GMT time later today, right, in about in about 3 hours or so, we've got the unemployment claims coming up, and then we've got retail sales tomorrow at 6 a.m. GMT. All right. So when we look at unemployment claims over the last 7 weeks or so, they've been relatively steady. Right. They've pretty much averaged around 213,000 claims over the last 7 weeks. Right. So for the current reading of that's coming up later, the forecast is set at 215,000. Right. So how can we interpret this data? Right. So generally, unemployment claims are basically a metric that tracks the number of Americans filing for unemployment benefits. So if you see a very high number, that means there are more Americans filing for such benefits, and this could potentially signal a weakening in the labor market. Now, so as you can see here, the forecast for this week is 215,000. So if the actual number of claims or the result comes in greater than 215,000, that means there are more than expected people filing for unemployment benefits. So this would then typically signal a potential weakening in the US labor market, which would then be bearish for the US dollar. So if it's going to be bearish for the US dollar, then, of course, currency pairs like the euro, pound, Aussie, and Kiwi are likely to rise, and of course, gold prices too. Conversely, if claims come in less than 250,000, that means there are less than anticipated people filing for such benefits, and this would typically signal a more robust labor market in the US, which is then likely to be bullish for the US dollar. And of course, that would mean currency pairs like the euro, pound, Aussie, and Kiwi are likely to fall along with gold prices as well. So take note of this economic news release coming up today and how we can interpret the data and use that for our trading and use that to help us identify potential trading opportunities. And last but not least, we have UK retail sales coming up tomorrow at 6 a.m. GMT time. Right, so as you can see, over the last 4 months, right, since November of 2023, retail sales in the UK have been pretty much mixed. Right, you've had strong months as well as a strong decline, strong months of gains as well as a very strong decline in December as well. Now, after being flat in February, the estimate for March points to a slight increase of 0.3%. Right? This is a very small increase when you look at the gains that have occurred in November and January. Now, should we see a final sales figure coming in higher than a growth of 0.3%, right? That means they're more, that would signal that the UK consumer is still in good shape, they're still resilient, and they're still carrying on with their daily expenditures. So that would potentially mean it could function as a bullish catalyst for the pound. So take note, should we get a reading that's going to come in higher than a forecast of 0.3%, then this is quite likely going to at least create or at least provide a short-term bullish catalyst for the British pound. Conversely, if the data comes in flat or even worse comes in much lower than the estimate of 0.3%, then we're quite likely to see the pound come under heavy selling pressure. Right, okay, with that, so now let's move on over to the slides on trading view. Right. Okay, so here I am on the chart for the dollar index. I'm starting off on the daily time frame. Right. So as you can see here, since last Wednesday, the dollar index has bounced quite strongly, bouncing from 104 to a high of 106.50 yesterday. Right. Part of this reason here was we saw, of course, stronger than anticipated CPI and PPI data out of the US last week, which has created or which has signaled the return of the dollar bulls. So we have seen over the last five trading days very strong bullish action for the dollar index. But of course, today we saw the dollar index gap lower, and it was pulling back a little bit earlier in the earlier part of the day, right, dropping as low as 105.75, but it's retraced a little bit higher now. Right, so let's start the analysis on the dollar index. Right, okay. And of course, should you have any requests for any other currency pairs, indices, or commodities, please do let me know early, and I'll be more than happy to go through the analysis with you. Right, do not wait till towards the end of this webinar to drop your requests in. Just drop them in anytime in the Q&A box, and I'll be more than happy to go through the analysis with you. But otherwise, basically, we'll start off with the dollar index, cover a few of the major currency pairs, cover the commodities, one or two of the indices, and any other instruments that you would like to be seen as well. All right. Okay, so quite clearly, right, this level here, this high that was formed yesterday, right, this is a resistance level as well, right? It's not the strongest resistance level at 106.51, but because I can't really reference any other major pullback resistance or swing high resistance. So for now, I'm just going to identify it as an intermediate resistance. However, where I do see very strong resistance is at 107. So I'm going to label this as the first resistance. Why is that the case? And we can actually see the dollar index making a very significant swing high resistance here. In fact, it's actually like a double top before coming down, right? You can see quite clearly on the daily time frame that the dollar index formed a double top in October of 2023, as well as right at the beginning of November of last year as well. So, and not only that, when you look at the entire market structure, this looks like a very significant swing high resistance. So of course, I'm going to be referencing this level here at 107 as my first major resistance for the dollar index. Right, now what about support? Okay, when I look across this price level here, previously this level at 105.85 was functioning as a pullback resistance level back in mid-November, right? So what was previously a pullback resistance could then potentially function as resistance. So you can see that today's candle is actually testing this resistance level here. So this was earlier in the week, I had identified 105.85 as my first major support on the daily time frame. But as you can see, with the dollar index gapping below today, right, it is currently testing this first support here. All right, then moving down a little lower to identify the second support. When I look across the price level at 105, this is also another significant overlap level. Right, previously this level here functioned as a pullback support in November of 2023, and as price broke underneath it and started rising up, it made a swing high resistance here in mid-February, and then running into resistance again at the beginning of April. So what was previously a pullback support level then functioned as an overlap resistance here, with dollar index running to resistance for the first time on 14th of February, and then running into resistance once more at the beginning of April. So this level here was previously functioning as a very significant overlap resistance. Now, of course, with price breaking above it, what was previously an overlap resistance could now potentially function as a strong overlap support. So that is why I'm going to use 105 as my, or rather, I'm going to identify the level at 105 as my second support. All right, okay. Um, is there any, we can also use a Fibonacci retracement, right? Okay, I'm going to start this retracement from here, down on 9th of April, going up to the high, yesterday's high. We can see that the Fibonacci retracement, okay, in this case, I'm going to use the 50%. I remember, yeah, the 50% is a little bit better here. I'll explain why as we go down the time frames. Right? Remember, we started the analysis on the daily time frame, but we'll switch on down over to the 4 hour time frame shortly and try and fine tune the analysis if necessary. Right, so when I look across the 50% Fibonacci retracement as well, right, I do see a pretty decent support zone between 105.20 and 105 itself. Right, you can see price finding a little bit of support here on 11th of April and 12th of April before bouncing higher as well. So this does look like to be a pretty strong support zone. All right, so take note, these are the key levels for the dollar index on the daily time frame, right? Intermediate resistance at 106.51. This was the high of yesterday. First major resistance at 107, which is this multi-swing high resistance that occurred in October and November of 2023. First major support at 105.85, which is currently being tested, right? Take note, currently there's a big major test at this first support level, and second support is at 105. Okay, now with that, okay, is there a Fibonacci projection that I can use? I think, okay, let me just see, let's try something out. A Fibonacci projection tool uses 3 points. So we'll start the first point from this swing low here on the 8th of March, going up point to point 2 on 2nd of April, and ending at point 3, which is on the 9th of April. We can see that the 100% Fibonacci projection aligns quite close to where the intermediate resistance has occurred as well. So this does look like to be a pretty significant resistance zone. So with that, I'm actually going to just move up my intermediate resistance a little bit to, oops, hang on, to where the 100% Fibonacci projection lies, and then cover this as a zone. Okay, right. So these are the key levels for the dollar index on the daily time frame. Right now, let's move on down to one time frame lower and try and fine tune the analysis if necessary. Right. So when we look at the first support, right at 105.90. You can see previously this was a pullback resistance back in November of 2023, which then proceeded to function as a very strong pullback support on 15th of April, right, just at the beginning of this week, before dollar index bounced higher. So as you can see here, when we look at uh, this part of the chart on the 4 hour time frame, we can see quite clearly it is broken below it. However, on the daily time frame, you can see it's still, it does look like that this first support has finally been broken on the daily time frame as well. But let's just on the daily time frame for now, I'm just going to keep it on, and for the 4 hour as well, right? Just for now, just for at least for today, I'll keep it on, and then of course I'm going to adjust this support level should we get a confirmation that it has finally been broken cleanly. Right. Okay. When I look at the second support, right, you can see here very clearly now from 10th of April till the 12th of April, price finding pretty decent support uh, at this overlap support level between the region of the overlap support and the 50% Fibonacci retracement as well. So this is a pretty significant support zone. And also take note, we also have the green uh, Ichimoku cloud here. So when the cloud is green, it signals to us bullish momentum. So do take note when the cloud is green in color, a bullish Ichimoku cloud can also help us to identify areas of support as well, right? You can see quite clearly here back in early April as dollar index was pulling back, right? It made a high at about 105 on 2nd of April and it pulled back over the next few days. However, it found support, very strong support in the bullish Ichimoku cloud. It retraced a little bit higher, consolidated for a while before finally bouncing higher. So once again, we have a bullish Ichimoku cloud uh, over here as well, which could once again offer pretty decent support as well, or at least helps us to identify a potential area of support for the dollar index. So should we see this first support level being taken out, right, then it's quite likely dollar index is going to drift lower, and it could find pretty decent support within the vicinity of this bullish Ichimoku cloud. All right, okay, so that's what we have here on the daily time frame. Let me see, are there any other retracement levels that I could use? Right, is there 23? I think 23 has probably been broken now. Let's see. Let's take a quick look. Yeah, so you can see here the 23.6% Fibonacci retracement aligns well with the first support, but of course, based on the 4-hour time frame, has clearly been broken now. And of course, on the daily time frame, it's testing this retracement. Right, and also take note, we've also got a bullish Ichimoku cloud here that helps us identify another potential support zone for this index. Right. Okay. So as I mentioned, we've got unemployment claims coming up later today. Right. The forecast is for 215,000. So should we get a number that's lower than 215,000, this would typically function as a bullish catalyst for the dollar. So that means dollar index is quite likely to rise. So that is why I said, for now, I'm not. I'm still going to keep this first support on the chart because we do not have a clear confirmation that this level has indeed been broken. Because if we do get a much weaker than anticipated figure for the unemployment claims, this is quite likely going to function as a bullish catalyst for the dollar, and that means we could potentially see the dollar index reverse around current levels and then climb back up above the first support, right? So this is the primary reason for why, as to why I'm still keeping the first support on the charts for now. All right. Okay, and of course, should we see unemployment claims come in higher than the forecast of 215,000, then this is quite likely going to cause the dollar to sell off. Now, should that happen, then it's very likely dollar index is going to continue its downward slide here, and you can target the region within the bullish Ichimoku cloud and the second support and the Fibonacci retracement at 50% as a potential take profit zone for any short dollar positions, right? So should you have any, should the data present itself as a bearish catalyst for the dollar index and we decide to go short on the dollar index, right? That means we can use this area here, basically between 105.20 and 105.30 as a potential area to identify a suitable take profit for any short dollar index positions. Similarly, should the data function as a bullish catalyst for the dollar, then I would be using the vicinity of the 100% Fibonacci projection to help me identify a suitable take profit level for any long dollar index positions here. So should we see a reversal at around 105.80 due to the stronger than expected data, which would then function as a potential bullish catalyst, then I'm going to be using the vicinity of 106.50 and 106.50 and 106.60 to identify a suitable take profit zone, right? So this is how we're using a potential catalyst to help us identify, we're using the combination of a potential catalyst as well as support and resistance areas to identify suitable take profit zones should we see this index move in a particular direction. All right. Okay. So this is what I have for the dollar index on the 4-hour time frame. Right. Okay. As I mentioned, we also had the Australian labor force report out earlier today. So let's take a quick look at what the Aussie is currently doing. Remember, as I mentioned, it was a relatively weak report where jobs were actually lost in the month of March, and we also saw the unemployment rate edge higher as well. Right, this does seem to point to a potential softening of the labor market in Australia. So this should typically be uh, should typically be bearish for the Aussie. However, right, it's still showing pretty strong resilience. Right, that data came out today at around 1:30 a.m. GMT time. So that's around here, right, on this candle here. So as even though it was a pretty weak report, the Aussie actually moved a little bit higher. However, if you look at the last 3 hourly candles, it does seem to have run into resistance around 64.55 and is potentially dropping lower, right? So should you have any short Aussie dollar positions here, right? Uh, where you can identify a suitable, let's see if you can do the analysis and find suitable resistance areas to identify a suitable stop loss level, as well as to try and identify major support areas to try and identify some suitable take profits level. Should you have a short Aussie position? All right, there's a question as well. What do you use for trade confirmation for entry? All right, okay. There's a question here. Basically what do you use for trade confirmation for entry? Right, it's basically a combination. In this case, a combination of economic data point and a technical level as well. So let's just say for the dollar index if we see uh, unemployment claims come in lower than today's forecast, right? That means this is quite likely going to function as a bullish catalyst. And also I'll be looking at price action as well. So I would like to see uh, the dollar index climb above this first support, which is at 105.92. So I'll be looking to enter the dollar index, to go long on the dollar index once it breaks above the first support. So anywhere between around 105.95 would be a region that I would go long on the dollar index should the data suggest that it's going to function as a potential bullish catalyst. Conversely, in the opposite direction, should I see the data present itself as a potential bearish catalyst, then most likely I'm going to look at price action and I'll probably see where is the lowest point, right? If this level here at 105.75 is still the lowest point for today, then I'll be using this level here. Let me just point this out. I'll be using this level here as a potential sell entry for as a potential, which is at 105.75. I'll be using that as a potential sell entry for the dollar index should the data present itself as a potential bearish catalyst. All right, okay, what time frame? Okay, since the data is this is going to be dependent on the data itself, the result itself, and how it's going to function, and it as a catalyst, whether it's going to be bullish or bearish. Actually, in terms of time frame, uh, this would actually, it doesn't matter for me on the time frame because I'm going to be using the combination of the news release at 12:30 p.m. GMT time and this price action levels here at the first support at 105.93 and at 105.74. So it's a combination of the data release at 12:30 p.m. GMT time, followed by whether these two levels here are going to be hit. So if the data presents itself as a bullish catalyst and I see the dollar index move towards the first support, I'm going to be looking to go long on the dollar index at around 105.93. All right, this doesn't matter which time frame I'm on. Conversely, should the data itself present itself as a bearish catalyst, then and if 105.74 is still the low of today, I'm going to be using this level here to enter as a potential short entry on the dollar index should I see claims data present itself as a bearish catalyst. All right, Equip, I hope I've answered your question, right? So in this particular case for the dollar index, there's no particular time frame that I'm going to use to determine my entry, but rather I'm looking at price levels and the potential direction of the catalyst that's coming in today. All right, no worries. Most welcome. Right. Okay. So where was I? Right. Okay. I was on the Aussie. Right. We had uh, weak employment data or weak labor force report out of Australia earlier this morning. Right. So it does seem like now finally that bearish report is starting to weigh on the Aussie. So let's start the analysis for today, right? So if we are going to use this bearish report, this labor force report by Australia as a potential catalyst to short the Aussie, right? Let's see where are the major levels that we can identify, major support and resistance levels that we can identify. So as you can see here, the Aussie is still in a pretty strong downtrend, right? Every retracement to the upside, as we saw here last Thursday, as well as on Monday, and also yesterday and today. So far, the previous two retracements to the upside have always met with resistance and have reversed to drop lower to resume the downtrend. So it does look like quite likely this weak labor force report today could cause the Aussie to drop lower. And remember, we also have unemployment claims coming up. So should that data function as a bullish catalyst for the dollar, then of course that means the Aussie dollar is likely to fall even further, right? Take note of how the unemployment claims is also going to impact the direction of the Aussie. So once again, if unemployment claims are going to function as a bullish catalyst for the dollar, that means the Aussie here is likely to drop even further. All right. So with that, I think it's quite clear. The first support for the Aussie is at 64 cents, right? This is clearly the first support for the Aussie here. It bounced off this level on Tuesday quite convincingly and has been retracing higher ever since, right? So should we have any short Aussie dollar positions here, and if it continues to drop lower, targeting the vicinity of at 64 cents would be a good area to identify a suitable take profit for any short Aussie dollar positions that we may have. Right now, looking at resistance, there is a pretty decent intermediate resistance level here, or rather an overlap intermediate resistance level here, right? Why do I say that? Previously, back on 12th of April, price found support here at 64.56. Retraced a little bit higher for about pretty much a day before reversing once again to drop below it, right? So taking out that pullback support level, and then as price was retracing higher yesterday and today, right? It ran into resistance once more. So what was previously a pullback support level could now potentially function as resistance. So with price clearly having reversed off this level, this pullback support level has now turned into an overlap resistance here. So I'm going to identify 64.56 as an overlap resistance here, right? The first major resistance where I see for the Aussie could is quite likely to be here at this pullback resistance at 64.93. So that's why I'm going to identify the first major resistance, right? We can also use a Fibonacci retracement. Perhaps there'll be a couple of retracement levels that are going to add additional significance to these resistances here. So we'll start this retracement from 9th of April, going down to the swing low here on the 16th of April. We can see that this overlap resistance at 64.56 also aligns quite well with where the Fibonacci retracement at 23.6% lies. Let's just take a look at where the 38.2% lies as well. Yep, it also aligns pretty close to where this first resistance has been identified. All right, okay, sorry, there's a question here. Which one is first? All right, okay, quick. Okay, what is your take on the COT report? I used to compare those. Okay, yeah. COT commitment of traders. Yeah, that's a good report as well. It's always good to look at positioning, right? You can see because it tracks the amount of trades on the long and short side for the futures contract of various securities, right? It could be FX, currency pairs, commodities as well. Yeah, it's definitely a good idea to track that as well on a weekly basis and try and see if there's any major shift in positioning based on the COT reports. And of course, yes, looking at fundamental data such as GDP growth rate, interest rate, and inflation rate as well, because that's definitely going to help us and help you form a much better, a much complete analysis, right? You're basically using fundamental analysis and technical analysis, incorporating all of those elements to come up with the best trading opportunity or best trading setup and idea. So yeah, definitely take a look at the COT report. Continue to take looking at the COT report. If you're doing that, take a good look at positioning because it really makes a difference when you see that shift occur, right? When suddenly you see a major shift from long traders who are long suddenly shifting and unwinding that position and going short, right? So that transition is important to track as well, right? So yeah, definitely take a look at COT report and look at the fundamental aspects as well as what you've mentioned here. Right. And one more question. Do you always mark the body of the candlestick and the wick? All right. It depends, right? Uh, in this case, you can also use the body of the candle to mark the resistance, right? You can always use the body and that. And for example, here in the example of the first resistance, right? I had used the top of the wick and then I used the shading box to highlight the resistance area from the 38.2% Fibonacci retracement up to the top of the wick. Or you can do it the other way as well. Use the body of the candle here on 15th of April, and then run the box, shaded box, up to the top of the wick, right? It's up to you, right? It's up to you on how to do it. So basically, I'm just highlighting this as the zone, which is between the 38.2% Fibonacci retracement and the top of the wick that occurred on 15th of April. All right, most welcome, Equip. Right, okay. So, all right, here we, right, okay, so back to the Aussie, right? So should we see uh, especially now that we have unemployment claims coming up. We've already seen a weak Australian labour force report, and should we see unemployment claims are going to function as a potential bullish catalyst for the Aussie, then quite likely one of the better trade opportunities would be to short the Aussie today, right? So if we short the Aussie, where can we place a suitable stop loss area, right? I would place the stop loss at about 10 to 15 pips above this overlap resistance here, right? So basically, the top of this wick here is at 64.55, right? So if I set a 15 pip buffer, that means I would place my stop loss at about 64.70, right? So should I have a short Aussie dollar position following the uh, bullish, following the unemployment claims that presents itself as a bullish catalyst, and I go short on the Aussie, where I would place a suitable stop loss area, stop loss level would be about 10 to 15 pips above this resistance zone. So if I look at the top of the wick here, that's at 64.55. So I would place my stop loss 10 to 15 pips above 64.55 should I have any short Aussie dollar positions later on today. And of course, I'll be looking to use the vicinity of the first support at 64 cents to identify a suitable take profit, right? So you, once again, because you can see the wick coming all the way down towards 63.89, or let's just say 63.90, I'll be targeting 64 cents and 63.90 as my potential take profit zone. All right, so this is what we have for the Aussie today, a potential setup for the Aussie today. Should we see unemployment claims present itself as a bullish catalyst, right? Remember, if it's going to be bullish for the dollar, that means the currency pair Aussie dollar is likely to fall. Right. Okay. So this is what I have for the Aussie. Right. We've also got what is it? Oh, retail sales for the UK coming up tomorrow. But okay, doesn't matter. That's still quite some time away. But doesn't matter. Let's just do the analysis for the pound as well. All right. Similarly here, right? As you can see, since 11th of March, the pound has been pulling back quite sharply, and most retracements to the upside have run into resistance at some point. And currently, we can see over the last couple of days, including today as well, it is retracing higher. So the pressure, while the bias for the pound is still to the downside. As you can see here, we have the presence of a bearish Ichimoku cloud. Remember, as I mentioned earlier, the green Ichimoku cloud can help us identify potential areas of support. Similarly, a bearish Ichimoku cloud can also help us identify potential areas of resistance, right? So take note, on the 4-hour time frame, the pound is currently trading around 1.2470. And should it continue to retrace higher, it may run into resistance within the vicinity of this bearish Ichimoku cloud, which is what had happened about 2 weeks ago, right? Which we saw 2 weeks ago on 3rd to 4th April, the pound was retracing quite strongly, coming as high as 1.2680 before finally reversing within the bearish Ichimoku cloud and reversing to drop. All right, okay, there's another question. Last question, is Ichimoku cloud okay? No, this is an indicator, right? It is an indicator that's been developed by someone else. It's called an Ichimoku cloud, right? So if you go to TradingView or any platform that you may have and you go to indicators, and you just search for Ichimoku, is yeah, so just the Ichimoku cloud is the default uh indicator. It's a momentum indicator, and is found on, I would say, almost all trading platforms, right? Including TradingView, of course, and also on IronFX, also the platform for IronFX, and also if you're using MT4, MT5. So I'm just using the default settings for Ichimoku Cloud here, right? All right, okay, welcome, Equip. Okay, so so now we've seen the pound sort of consolidate within this area here. Why is it not shown? I call it no. Okay, right. So sorry. Okay, so we can see since last Friday, right? The pound has been consolidating between 1.2420 and about 1.2480, right? Approximately between 1.2420 and 1.2480, a 60 pip range since last Friday, right? So it's sort of waiting for the next bullish, next catalyst to drive it out of this box here. Now, could that be unemployment claims in the US, right? Remember, if we see unemployment claims come in higher than the forecast, that means that is going to function as a potential bearish catalyst for the dollar. So if it's bearish for the dollar, that means pound dollar is quite likely to break out of this consolidation box and move higher and probably run into resistance, maybe in the vicinity of this Ichimoku cloud and this pullback resistance here. Right. So should we see uh, the claims, right? The claims result that that's in favor of a bearish catalyst for the dollar. That means quite likely we could potentially see pound dollar break out of this consolidation box. That means break out of about 1.2485 and then move higher towards into the bearish Ichimoku cloud. So take note, right? I would be using this price level here at about 1.2485 as a potential entry point for long pound positions. Should we see the data present itself to be bearish for the dollar, right? So if it's bearish for the dollar, pound dollar is likely to rise. So take note, I'm going to be using this level at about 1.2485 as a potential entry point for any long pound positions. And then I will use the vicinity or I would use the region of the bearish Ichimoku cloud and this pullback resistance at 1.2566 as a potential take profit zone for any long pound dollar positions. All right. Okay. Of course, now that I've said this, pound has been consolidating between 1.3620. So quite clearly, this is the first major support for the pound. If I zoom out a little bit, is there any other level that I can really reference? No, not really. When I look at the market structure here, right? This also points to me a very nice swing low support that has taken place in mid-November 2023. So this is a very strong support area. So because of that, I would use this swing low support here to help me identify the second support for the pound. Right? Take note, this is a strong pullback support or even swing low support here. So that's at 1.2395. Right. So conversely, right, should we see the pound falling strongly due to the unemployment claims functioning as a bullish catalyst for the dollar, right? Then we can use the region between the first support and the second support to identify a suitable take profit zone for any short pound positions that you may have. All right, so take note that this region here between 1.2425 and 1.2395 would be a suitable take profit zone for any short pound positions that you may have. Right. Okay. We can also use a Fibonacci retracement. Perhaps there's a couple of retracements that we can use to identify or to add further significance to the resistance levels. However, I would also like to point out that there is an intermediate resistance here at 1.2481, right? Which also can be used as our potential entry for a potential bullish breakout as well, right? Just remember, if the data is going to function as a catalyst for pound dollar to rise higher, this intermediate resistance at 1.24881 can then be used to be used to identify a potential long entry point. All right, as I mentioned just a little bit earlier, we're going to use a Fibonacci retracement. So let's start this retracement from here, 9th of April down to the low of Tuesday. We can see that the intermediate resistance at 1.2481 uh, aligns very well with the Fibonacci retracement at 23.6%. I believe that's the 50% we can use as well. 38% is probably not going to be useful for us now. But yes, we can see that the 50% retracement aligns pretty well with the first resistance here, which is the pullback resistance. right? We can also, I think, use a Fibonacci projection here. All right, so projection uses 3 points. This projection is going to be used to perhaps add more significance to the support levels here. So the projection first point is going to start from 21st of March, going down to the second point here on 1st of April, and ending with the third point here on 9th of April. All right, okay. The key retracement level, projection level, sorry, lie at 61.8%, 78.6%, and 100%. So quite clearly, you can see the the pound has already smashed through 61 and 78.6% and also has smashed through the 100% Fibonacci projection. So as price is falling here, right? So on last Friday, with the pound falling quite strongly, right? We can also use the Fibonacci projection to help us identify a suitable take profit level as well. So typically you would use the 100% level here, which is the maximum extension or projection of where price could potentially hit to. So remember, Fibonacci projection levels are levels that help us to predict where price could potentially reach. So in this case, because I'm drawing it from point 1, 2, and 3, I'm looking at, and as the pound is falling, I'll be using the 61, 78, and 100% Fibonacci projection to help me identify potential take profit zones as well, right? Take note of that, but because it's already gone through all of these levels, we don't need that. Where we could potentially also use a projection would be here as well, starting from point 1 on the 11th of April, going down to point 2 on the 16th, and ending at point 3 on the 18th. We can see that the 61.8% Fibonacci projection lies quite close to where the second support is. So, of course, 78.6% and 100% are well away from where price is currently trading. So let's just keep 61. So that means if we do see the pound continuing to fall even further, breaking through first support and second support, right, then of course you can also target the Fibonacci projection at 61.8% as a suitable take profit zone as well. So that means the pound could drop as low as 1.2377 as well, right? If it breaks through the first and second support. So take note of how we can also use a Fibonacci projection to help us identify suitable take profit levels as well, or in this case, help us identify suitable support zones as well. All right, okay. As we come towards the end of today's webinar, right, we still got about 10 minutes left or so, but are there any requests for any other currency pairs or indices or commodities that you'd like to see? We still got some time, so I'll be more than happy to go through the analysis with you, right? If there are no requests for any other instruments, then I'll just take a look at, we'll wrap up the session with gold and oil, right? Right, is that fine? Right, if there are no other requests coming in, then we'll just wrap up the analysis on today's webinar with gold and oil. Right. So when we look at the chart for gold, very clearly, I'm on a daily time frame now. It's very clearly it is a very strong bullish momentum here, of course. And then when we look at it on the 4-hour time frame, we can see that uh, on 15th of April and also yesterday and today, we can see that price has found pretty decent support just above the bullish Ichimoku cloud, right? So once again, the bullish Ichimoku cloud can help us identify potential areas of support, which is what had happened at the beginning of the week on Monday, 15 April, and which is something that we are seeing since yesterday as well, right? As you can see here, the last 3-4 hour candles have sort of stalled around $2,360 per ounce and have started to move higher as well, right? So this reversal uh, above the Ichimoku cloud can also help us identify a suitable long entry for um, gold prices as well. All right. So now for, of course, when I look across this level here at $2,431 per ounce, this is quite clearly the all-time high for gold, right? If I go on to the weekly time frame, right, we can truly appreciate the strength of this move here that we've seen since February, since mid-February. Gold prices have really skyrocketed, right? Going from about $2,000 per ounce to as high as about 2,400, right? Very strong move in gold here. So quite clearly, the first resistance is going to be the all-time high at 2,413. Now, let's just say price continues to go higher and smashes through the first resistance, how are we going to identify the next resistance level? Remember, gold is trading quite close to its all-time high. There's nothing in the past that we can reference, right? We can't reference a previous swing high resistance as what we saw at 2040, right? This was a major swing high resistance level that occurred on August 2020, March of 2022, May of 2023, and as well as December of 2023 as well, right? You can see quite clearly this level here at $2,000.75 per ounce was very clearly a very significant multi-swing high resistance in the past. So by looking at previous resistance levels in the past, it helps us identify potential resistance areas in the future. But of course, with gold trading near all-time highs, we have nothing to reference. So how are we going to do that? Okay, so first of all, I'd just like to highlight this as the first major support level for gold on the weekly time frame. We're going to use a Fibonacci projection to help us identify the next suitable level here. So this projection is going to start from here, August 2018, going up to 0.2 on August 2020 and ending at 0.3 and September 2006, right? Let's pull up all the Fibonacci projections so we can see quite clearly. First projection at 61 and 78.6 has been taken out. So the only valid projection is at 100%. So let's keep 100% on. And that's what we're going to use to help us identify the second potential resistance area for gold. And that's at $2,527 per ounce. All right, okay. So this is how we can use Fibonacci projection to help us identify potential areas of resistance when there's nothing else to reference as well. All right. Okay. Is there a Fibonacci extension that I could use? Let me see if there's a Fibonacci extension. Remember, the key extension levels lie at 137 and 161%. Okay, that's fine. There's no need to use that anymore. Price has clearly smashed through all these extension levels, so let's just get rid of it. Okay. Now, what about support? Right. Of course, first support at 2075 is clearly quite far from where price is currently trading, right? So let's zoom in into the lower time frame and see if we can identify any other suitable areas as well, right? We can also use another Fibonacci retracement, this time starting from here, 14th of February, going up to the all-time high. Let's pull up all the fibs. We can see that the Fibonacci retracement at 78.6% aligns very well with the first support. We can also see the 61% retracement aligns very well with this other pullback support level here. So I'm going to identify this as another support level as well. And also where the 23.6% Fibonacci retracement level lies, I see another decent pullback at 2,333. So the retracement levels that I'm going to keep here are 23%, 61%, and 78.6%. Right, so this is how we can use Fibonacci retracements and price action to help us identify suitable levels here. As you can see quite clearly, since 9th of April till 15th of April, gold prices have sort of consolidated above this level here, acting as a pretty decent support level. And similarly here, price consolidated around 2,150 back in March as well, mid-March, before bouncing higher. So this is another pretty decent support level for gold as well. Now, finally, let's go on down to the 4-hour time frame. Right, as you can see here, on 15th April, earlier this week, gold prices found support at this pullback support level and the Fibonacci and bullish Ichimoku cloud to bounce higher. And this time on Wednesday and Thursday, once again, it does seem to have found support just above the bullish Ichimoku cloud once more and could potentially break higher as well. All right, Equip. Okay, generally, to answer this question, I start the analysis on the daily and 4-hour time frame, right? Because that's when you are really able to visualize a clear market structure. And what do I mean by clear market structure? We are able to see significant swing highs, swing lows, support levels like this at 61.8%, support levels like this at 23.6%. So I start with the daily and 4-hour time frame to identify the real significant support and resistance levels and try and combine them with Fibonacci analysis and the bullish Ichimoku cloud to identify major resistance and support levels. And then, of course, use the lower time frames, perhaps like the 1-hour time frame and 30-minute time frame to fine-tune the analysis if necessary, right? So, but Uh, so just to recap, so I use the daily and 4-hour time frames to start the analysis, identify the major support and resistance levels based on previous swing highs, swing lows, pullback supports, pullback resistance, combine it with Fibonacci retracements, projections and extensions, and also use the Ichimoku cloud. And then once all that is done on the daily and 4-hour time frame, then perhaps if you wish to fine tune the analysis, you can always drop down the time frames as well, going down to the 1 hour and 30-minute time frames as well. All right. Okay. So before we end this webinar, right, I'm just going to launch a poll. Truly appreciate it if all of you can give your feedback as well. All right, sure, Equip. I'll do the analysis for dollar index again once I close the poll as well. Sure, more than happy to do that again. We still got a little bit of time, so let's do that. Let's cover dollar index again just before we wrap up today's session. All right, just going to leave the poll running for a little bit longer. All right, okay. Thank you, everyone, for giving your feedback. Right, truly appreciate it. All right, okay. So with that, okay, let's go back to the dollar index. All right, so just to recap, okay, so currently I'm on the 4-hour time frame. Right, so as I mentioned here, when looking at it on the daily, it is clearly testing the first support here. And when we look at the 4-hour time frame, it has sort of bounced off 105.73. And should it retake the first support, we could see dollar index climb higher, especially if we have that bullish catalyst that's coming up at 12:30 p.m. GMT. Remember, the unemployment claims is going to be the next catalyst for the dollar index. Now, if that result comes in lower than the forecast of 250,000, it's quite likely going to function as a bullish catalyst for the dollar. So that means dollar index is likely to climb higher following that result. Conversely, if the data comes in bad, that means the data number of claims comes in higher than the forecast. That's quite likely going to function as a bearish catalyst. Then I would use this level here at 105.74 to help me identify a suitable sell entry for the dollar index. All right. All right. So that's all I have for today. Right. Thank you everyone for tuning in. And do look out for all upcoming webinars by IronFX. And I wish you all the best in your trading journey for the rest of this week. All right. Thank you everyone for tuning in. And once again, do look out for all upcoming webinars by IronFX as well. All right. Take care and catch you all at the next webinar. Thank you.